We're about to close out Q1 of 2025, and Bitcoin's quarterly range data has given us key insights as to what may come next. Ethereum's price action is flashing key signals as well. Are we gearing up for a breakout or facing an even deeper correction? And Ondo hit a major key region we've been tracking also, so we'll be taking a look at Ondo as well today. And if the markets weren't already volatile enough, we've got another potential government shutdown looming over the US, adding uncertainty across the board. And on top of that, Trump just announced a massive 200% tariff on European wines in response to the EU slapping a 50% tariff on US whiskey. How will this impact global markets? And more importantly, what does it mean for your portfolio? As always, folks, we've got a jam-packed episode here for you today, so make sure to grab a cup of coffee, whether it's hot or iced, because we are breaking it all down now. Taking a look with Bitcoin to begin here, I've got a couple of key regions mapped out, and essentially we are hugging this yearly pivot that I've been discussing in the last few videos here. Is actually one of the two levels that Nick and I first went over on my very first video here with you folks. And that sits about this $80,000 area right here, and what that is, it's marked by this 12M pivot, by the way, so that's just a 12-month pivot, which is an average of price for 12 months. This is the average of price of last year, essentially, which I've always compared this to a 200-day moving average or a 50-day moving average, or what have you. Those are dynamic. They're constantly changing and moving because the price action is adjusting to those as we go. This price action is non-dynamic, which means it's not moving. Once it is set in stone, it just is what it is. It lives where it will be. So this is a 365-day non-moving average of price for the last year, which price tends to revert to mean reversion. Simple as that. And that's essentially what we've done here, right? So now this $80,000 area is, to me, the biggest line in the sand for multiple reasons here. Locally, this was actually last week's low, which came in right here as well. And we essentially swept that to begin this week, which as a trader, just on some shorter time frames, like this was just what we'd be looking for a little sweep of the low and then a little run back here. But we've come back down now as we're closing out the week here Friday, and we're really hugging around that yearly pivot at $80,000. Now let's just go ahead and get the downside out of the way here while we're looking. Essentially, if we start to close daily and weekly candles below that $80,000, we have the previous all-time high here back from March of 2024, which we came up to last year before we ranged sideways pretty heavily. Honestly, if that does not hold and realistically coming down below this region, it's one of those things where you're just really going to have to prepare for some sizable downside from here, because if this region, while yes, a nice back test of this area is very technical, and we see this time and time again where you had this high put in, you get a nice breakout, you get an official back test of it as support before that continuation. For me, when I look at this, I look more so at the range data from this area here, from where we essentially range through this region. We got the breakout. And for anyone that's new to this, I tend to look at these areas here. This is a fixed range volume profile. It's a tool on TradingView here. And you can see essentially what the illuminated area here is. 70% of all the volume that occurred during an area on the chart essentially is known as the value area. All right, and that's basically going to give us our range based on volume. And that's in this region right here. And this large white line that's coming out of the highest volume spike right there is called the point of control. And a lot of times when we leave a range like this, we left the point of control at this point. It's not been back tested, and that's what's known as a naked point of control or an untapped region. Really a little bit cleaner version to say it. Inefficiency in the market, what have you. But this is the area that we spent the most amount of time when we traded in this region, and it's all the way back down around $67,000. That is definitely going to be something I'd be looking to if we start to lose $80,000 in this region here, which isn't too far away, obviously, from that previous all-time high. This would be definitely a key region I'd be looking towards if we were to come down to it. As always, we'll be looking at the context around the market if and when we were to come to those levels. If we were to break back into this range down below us and meet that naked point of control, once again, it would have to be something where we'd be looking for a reaction from that region. We'd want to see us get back out of the range, and then we'd look for some more upside. Otherwise, living in this range, while this is a key area to be aware of, we have to be aware that we may also rotate that range once we re-enter a historic range of this caliber, basically. So that is my downside area. Once we start losing 80,000 is really the only time that we can really get to a point where we're really considering that region, but it is something that's very likely. Keywords here: if we lose $80,000 on daily and weekly closing basis. I brought up the quarterly range data in the beginning of this video because in 2 weeks we will have closed our first quarter of the year and we'll have a new quarterly range that will generate for Bitcoin. And usually that gives us a pretty decent area to work off of, especially as we enter into the next quarter. So when we have a new quarter, our previous quarter is very relevant, as same as our previous week during the next week, our previous day during the next day, and so on. And I want to show the example of how last quarter's range ended up playing out during this quarter. I just want to show you how impactful this can be, especially once again, as we entered this quarter. This was something I was very highly aware of because for two things. When we came back up and breached this region right there, we ended up doing what's known as an SFP, a swing failure pattern. Unfortunately, not a super fun Paul. But we ended up coming up, we took the high, there was a huge bearish reversal harmonic pattern I've covered a couple times, but overall this was a area we were looking into at the time. We came up, we took the highs, and we closed back below. So not only did we come up and we took our yearly high from before, it was our quarterly high, it was also our quarterly range high, and like I said, there was a bearish reversal pattern that presented itself up here with targets back down to 86,000. And the number one thing that I was looking for and focusing here was that we had that untapped yearly average sitting right at the bottom of the range. So once again, this fixed range volume profile is utilized by looking at all the data for the section of the chart that we're anticipating to view here. In this case, I'm looking at Q4 of 2024, and that's giving us the value area of that region. We started off at the high and we rotated this range overall down to the low, and we are sitting right there right now. This is something we see time and time again, whether it's on a daily time frame, weekly, monthly, quarterly, 6-month, yearly. And generally when we have a huge pump like this, especially at the end of a session, so in this case the end of a quarter, the end of a year, the end of a cycle, we had all the things, everything was pumping so hard into the end of the year there, you tend to get a reversal. You see that once again also time and time again. You'll have a day that goes a nice pump to the upside or a dump to the downside, and then the very next day it feels like it just gives up those gains or just eats those losses back up right away, because usually we're going back and we're filling some inefficiencies in the market, you're rotating those previous ranges and just building out the data. So now that we're only 2 weeks away from the end of this quarter, let's just take a look at what our range at the moment is shaping up to look like. Now there's still 2 weeks left in the time period that we're looking here, so this can change a little bit, but I doubt it'll change by much at this point. We have a lot of volume that took place up at the high here, a little bit down here, so 2 more weeks probably won't fill this out to the point where we'd shift our value area from there at this point in my opinion, but we'll see and we'll update along the way. But this is what I will be looking for as we start next quarter here, and a lot of times what you'll do is when you get a dump like this after, and especially into the end of a session, so in this case I'm looking at this quarter, the next quarter you'll get at least a retracement back up to some of our new averages of price. We'll have a new quarterly pivot, we'll have new monthly pivots, things of that nature, as well as a naked point of control. Most likely we'll be sitting up here around $96,000 to $97,000. You'll note I have this untapped daily horizontal level sitting here at about 106. The reason I do is because it's going to be sitting at the top of the range. So as we come into the next quarter here, I'll be looking to see if we start stair-stepping our way back up, and if we can start to reclaim some of this ground, get back above $92,000. I assume we'll run into the point of control at that point. That's our natural target once re-entering a range. And then at that level, I'll look for a support resistance flip of that region, and then we'll probably look to take it up to $106,000 after that. Now Ethereum has been taking the stairs down for what feels like the better part of at least the last year, and we've come down and finally taken out the lows from 2024, and at least for the last 3 months here. So you're talking at least the last 15 months now, we've come down and wiped out anyone in profit, whether it's a short-term trader or anybody that's even just bought above anything in the last 15 months. And we're sitting in a key region here that, similar to Bitcoin, where we want to see the reclaim of our yearly pivot, which is our average of price of last year. More so for me, it's probably going to be the 2024 low, which sits about $2,044. Otherwise, we really could see us just kind of range around in this region a little bit more. I do have a key area, mapped down below us at about 1670. No guarantee we see that by any means, but from this region here, I think that we really do set up. We have to wait to see the confirmation of some strength here from Ethereum, and that really would begin with the $2,044 level getting reclaimed on a daily, weekly closing basis. And then I would look to have a run probably back up to this $2,700 region here, and that is similar to Bitcoin. If we're going to look at our new quarterly range data that's going to be printed here in a few weeks, that's where our point of control does sit. Sitting right there about that $2,700. So if we were to find ourselves in this region here, and once again, we may just sit around here for the next 2 weeks, close out this quarter. May get a little burst as we walk into Q2 starting in April, get a reclaim of that region, which is also going to be our new quarterly range low essentially. And similar to Bitcoin, looking to get into this range. At that point, we start living above this region, so that gives us a little double confluence here with not only reclaiming the yearly average, which is going to be a somewhat bullish sign for movement to the upside, a reclaim of that 2024 low, which is going to give us a little bit of strength in the market, and then we're going to be entering into a quarterly range here, and at that point, the natural target at that region is going to be to seek out our point of control, and then we'll once again take a look at the rest of the context of the market, see if we get a flip of this region, and see if we can rotate this back up to that $3,300 level. Now, Ondo came down into a key region that we've been looking for really ever since the $2 high back in December. I noted that there was potential to put in this structure here that took us all the way back down into this boxed area here, which was a little bit of a wide range from about 71 cents up to about $1.03. And once again, this was around the $2 window, so that was over a 50% pullback if it was going to be had. But we have since come down and met that region pretty nicely here, got a decent reaction so far. So assuming that this harmonic pattern, which is known as the bullish shark, assuming that our low is in right here, which, just to be honest here, the 886 retracement here, which I'm putting basically from, if we were to see this move all the way from the X bottom point here up to the C point, if you were to see price retrace 88.6%, which is almost 90% retrace, that's when this pattern begins to be valid. But to be fair, it can go down past the X area down to the 113 extension. So for me, I've just been trying to build out a case around these levels so that when we got down to them, once again, looking at the context of the rest of the market, where is Bitcoin, where is Ethereum, and the fact that the two of them are dancing around their yearly averages at this point, bottom of a quarterly range for Bitcoin, really just up below the new quarterly range here for Ethereum. Piecing together some potential reversal areas is something that I'm very much trying to do at this point. So while this has no guarantee of being a low, this is the area, if I was to look at Ondo, I've been waiting patiently for a 50 to 60% retracement. This is where I'm interested in getting involved, potentially all the way down to this region here. But otherwise, if this is going to be our low and we're going to see a progression from here, I'm looking for an impulse move back to our 0.5 fib now from our high point here at about 217 down to the current low, and that is a 0.5 Fibonacci, a 50% retracement up towards the $1.43 mark. And if we begin to flip that region, we have our next two targets derived off this pattern specifically, which is the 886 at 198 and the 113, which sits at $2.33, would effectively be a new all-time high. Now, before we move on, let's talk about something that could change the game for major crypto assets such as XRP and Doge, because right now they're just sitting there underutilized, and that's where More Markets steps in. More Markets is a global liquidity marketplace that turns idle tokens into productive assets. Instead of letting your XRP or Doge, for example, just sit there, More Markets allows you to deposit once and earn yield anywhere without needing complex bridging or risky wrapping solutions. It works by letting you deposit your tokens into native chain vaults, and in return you get what's called more tokens, such as more XRP and more Doge, that can be used across DeFi ecosystems while the original assets remain secure. That means more yield, more opportunities, and none of the hassle of traditional cross-chain solutions. This is the first truly verticalized approach to DeFi, bringing vaults, bridging, and yield optimization into one seamless experience. More Markets is a trusted channel partner here at DataDash, providing a seamless way to earn yield while keeping your assets secure on their native chains. If you're interested in exploring More Markets and how it can put your idle assets to work for you, be sure to check out our partnered link in the description down below. Speaking of Dogecoin, we had a very similar drop like we had with Ondo down to a key area, which is basically a zone that I mapped out, which is comprised of two high time frame volume areas, which is a 6-month naked point of control and a yearly naked point of control. So if I was to pull up those high time frame ranges for 6 months of price action as well as a year, we would see that we had a couple of high time frame points of control that had not been revisited. So as we start to make our way back into those historic areas, they become really key regions here. So I am looking for either a sizable bounce out of this region here, and if so, we could look back to our 0.382 retracement zone, which comes in from our overall high down to this low now, which sits at about 27 cents. And then if we were to reclaim that region, the gold pocket would be the next major area I'm looking at as far as any upside from where we are now. If we are to come back into this box area, that 6-month naked point of control is what I'd be looking for the price to seek out, and that does sit at about 10 cents. So this 10 to 15 cent box is really the area I was looking for to see us get a sizable reaction from. Whether that's a bounce back to all-time highs is obviously unknown, but at least back to that 382 area, which is also noted as a big monthly area. If we were to zoom out to the monthly chart, you'll see that that's a huge region that we want to see Dogecoin get above for any more continued upside. Otherwise, we're just looking for that bounce, and maybe we get a run back up to that region, which would be a sizable move, about almost 100% from where we are now, and definitely from the low. So let's take a look at the Nasdaq as well, because we have obviously more things going on than just crypto. And in this last update that Cassie and I did last Friday, we were actually looking at the Nasdaq as it came down into that yearly pivot as well, that high time frame yearly average, similar to Bitcoin at 80,000, similar to Ethereum at 1974. That is the 365-day non-moving average that essentially bearish below and bullish above. So in this case, while we are living below this, we have to anticipate more downside. Granted, can't get too bearish at this point, right? This is not the area to assume that it's just going to go straight down from here. You may experience a bounce, maybe even back-to-back test that region, which sits at 19,819. But otherwise, we do have some really key support down below for the Nasdaq, sitting about 17,715, and then ultimately the gold pocket, which sits at about 14,000, with an untapped volume area down here is a 6-month naked point of control, sitting about 15,000. Now, at the moment, I don't anticipate we go straight there by any means. And realistically, what I'm looking for more so is that we'd come back up and look to reclaim this region, at least in the short term. And the same reason I'm looking at things such as Bitcoin and Ethereum in the same fashion, because once again, we have now a new quarterly average that we're going to be closing off here in just a bit. And as you can see here, if we zoomed in, we'll have a new range that starts at about 20,800. We'll have a new naked point of control, which is going to be our volume target for the next quarter, essentially, assuming we re-enter the range, of course. So once again, we'll be looking for things of note to start looking for some strength. At this point, we really do have to keep in mind that we're below major support at this point and making it resistance. So downside would be considered the most probable, but just have to know where that changes. And for me, it would be a reclaim of that $19,820 region, which is our yearly average. At the moment, that's more of a little distant idea here, but either way, that level getting reclaimed is going to be that line in the sand for the reversal, at least short term, even if it's just back up towards making a new lower high before we do continue lower. All right, folks, that's going to wrap up today's episode I have for you here. I hope you all have an amazing weekend. Get some rest, recharge, and get ready for whatever the markets throw at us next week. If you enjoyed this video, make sure to hit the like button and subscribe so you never miss an update. And of course, shout out to our channel partner, More Markets. If you want to put your idle assets to work, check out their link down below in our description. And as always, I appreciate you all tuning in. I'll see you all in the next video. And until then, everybody, cheers.